Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in SPY IWM QQQ, wild way to start the week, and it's all about perspective and time frame. You need to have the time frame of your trade in mind before ever entering that trade, because today was all bull. On the 5-minute time frame, after the first 10-15 minutes of trading, the bulls showed up and formed higher lows and higher highs for the next 3-4 hours of trading. But you look at the daily chart, we have lower highs and lower lows. We still have the exponential daily moving averages as resistance, and the bears are still absolutely in control of this daily time frame. The bulls have momentum heading into tomorrow with the strong close and the strong action all day today, but overall, this doesn't do anything in terms of breaking what the bears have put together over the past week. So think of it this way. If we saw an open exactly where we closed on Friday, and we closed exactly where we closed today, we would be in the red, and there would be a much more bearish feel to things. But it's because of the big gap down open and the recovery all day that there's this bullish sentiment in the air. And true, there's a lot of bull momentum here heading into tomorrow, but in terms of the overall action the past week, including today, the bears are still in control on the daily time frame. So the resistance levels I'm watching, the high of Friday afternoon, we saw a bounce attempt, and we hit a resistance in the mid 234s. It was at, the exact level was 234.49. Then I'm looking at the high of Friday, 235.04, and then if the bulls can break 235.34, they will prove strength because we will break this little lower high pattern that we have been forming for the past 2 weeks. So we still have exponential resistances. We didn't even test the daily exponential resistances today. So I just want to give everybody some perspective on things to keep in mind, that the bears are still strong on this daily time frame. The weekly time frame, it's all about these exponential moving averages. We closed right on the 8 period last week, and we're right on the 8 period this week. We're on the verge of a bearish MACD cross, and if we get rejected and lose these exponential supports this week, 4 more trading days to go, we will likely see a bearish MACD cross start to unfold. And the last time the bearish MACD cross unfolded was with the little bit of weakness we saw at the end of 2016. So the weekly time frame with 4 trading days left to go and where we close relative to these exponential moving averages will be important, but we have a lot of time left here trading. IWM, the low of 132.40 and 132.40, a double bottom and a rocket ship to the upside. Very confident in that support. The bulls were, once it held, shot back up, and we are rejecting from the exponential resistance. The 8 period rejected the price from the high. So same story. We have a very clear support now, but the bulls have to break 135.47 to break the downtrend and the lower high that formed last week. So if the bulls can get over 135.47, there's not a lot of resistance until this middle Bollinger Band, which is going to be right around 136 tomorrow. So key resistance for IWM is 135.47, and we now have a very clear support of 132.40. The weekly time frame lost the middle Bollinger Band last week, and we also made a key break of 132.74 support. Not by much, but we did lose that, or we did break that level. The bulls did buy that dip, a little bit of a lower wick there. If we cannot get over the weekly middle Bollinger Band resistance of 135.44, and if we cannot get over these exponential moving averages, we already had our bearish MACD cross, and now we have our bearish TCG cross. See that green line over the red line? If we were to see bullish continuation this week, the bulls could negate that bearish TCG cross of those exponential moving averages. But as of right now, it is still following through to the downside. So we do have to be watching these weekly resistances as well on this bounce attempt if the bulls want to prove their strength in the short term. QQQ. So the tech sector yet again is holding up the S&P 500 in my opinion, seeing it compared to the financial sector and leading the bounce to the upside today. So we did get a lower low here and we did close right on the middle Bollinger Band, literally to the penny, and the exponential moving averages are right there as well. So clear rejection. Well, I won't call it a clear rejection, but still resistance levels that the bulls need to clearly get over, and we have to see a break of 131.29 to break that lower high from the bounce attempt last week. So QQQ and IWM are closer to breaking those resistances than the S&P 500 is. Resistances referring to the high of the bounce attempt at the end of last week. So the bulls still have some more proving to do, and we need to see follow through tomorrow in order for them to shift the momentum and the sentiment on the daily time frame. So QQQ could be forming a bull flag here on the weekly time frame. QQQ has the most wiggle room in terms of still holding these exponential moving averages clearly, not really seeing a bearish TCG cross, and still holding off on the bearish MACD cross. So it's still the strongest weekly chart, and again, could be a bull flag forming there we're going to have to keep an eye on. So heading into tomorrow, watching Friday resistance levels, and we will check back in tomorrow and see how the bulls fare on their attempt at continuation.